Yeah, you too.
From City Index there, getting across, Chinese PMI. You've had the comments from Glenn Stevens, the RBA governor, the last short while. And of course, Billabong shares right now at $1.33, up by 21%. Kingsgate, one stock in focus for us today as well. It's delivered a record full-year production result. This gold miner produced almost 209,000 ounces of gold. That was up 85% on year. Average cash cost, $720 per ounce. The mine is expecting another banner year for production in 2013, with output tipped to exceed that of 2012. Here's the Kingsgate shares for you on screen, up 3 cents at $4.77. To get us some more details on all of this, to walk us through it, Managing Director Gavin Thomas joins us from our Sydney CBD studio. Gavin, good afternoon to you. Tell me about the Chatree gold mine in Thailand in particular, and the record quarter that you've had. Why? What's been behind it?
Oh, Brooke, I think really what it is Chatree demonstrates Thailand is part of the Asian community, and you have the Asian competitive advantage. It really has been a fantastic time for us at Chatree over the entire 11 years we've been operating. But this was a record quarter and certainly a record year for us. And that's because we've expanded our plant. Unlike Australia, we've been able to build that on time and on budget. And I think that just demonstrates that not only can you operate, but you can build well in Asia.
Tell us exactly what you mean when you talk of that competitive advantage in Asia.
We have good infrastructure, we have power, we have bitumen roads. You could drive a Ferrari to the front gate of the mine if you wished. And with that, it means that you don't have to put in additional infrastructure at all. We have a major hydroelectric power line coming through the property. So we have a substation 1 kilometre from our mill. They're the sort of things. The other thing is that the people in Thailand in particular are very, very skilled. We've trained them up. We run the mine with 4 expatriates. Most other companies operating there, expatriate companies, operate with 1 to 200 people. We operate with 4. That's our commitment to Thailand, because we believe that the people there can do a fantastic job. We've brought them down to Australia, and many of the Australian, our mine in South Australia wants them to come back again because they're such good operators.
Are the labour costs there an advantage as well?
Of course they are.
Yeah.
And that's part of the Asian competitive advantage. You have highly skilled workers and outputs. For example, they understand, they've bought into the modern mining game. We're running the world's safest gold mine in 4 phases of construction and nearly 12 years of operation. We've had 1 lost time incident, and it's just truly amazing when you compare how they've taken on board the Western approach. And it's not a slapdash, it's a world's best practice mine that we run.
I know that I was looking over some broker notes in the past couple of months. I saw that Macquarie back in about April downgraded the earnings forecast for Kingsgate because of higher costs, and in particular at Challenger. What kind of cost pressures have you seen?
Well, in Challenger, we've had an average quarter there. It's been around about $1,000 per ounce, including royalties. We've been struggling with a couple of availability issues with the underground mining equipment. We've been in major discussions with the mining contractor to improve those. We've had some people being taken by competitors. And one of the issues you have in the Australian mining industry, you lose 2 or 3 senior people, and that has massive impacts all the way through. This quarter we've been rehiring. We've got a workforce back up to where we are, and we'd expect the Challenger mine to improve gradually. We're having a year of consolidation at Challenger to put in development so that it can have a nice, good long run after that, with all of the equipment available and all of the development available, so it can be getting back to its December quarter cash cost numbers.
Talk to us about the cash levels and basically what you've got at your disposal to fund growth projects at the moment.
Right, we have order of magnitude $100 million cash at the moment. We're in a growth phase in the company. We have 2 projects. First of all, we're completing the Chatree expansion. We're finishing off the tailings facility, which is almost done. Then we have the Nueva Esperanza project in Chile. This is, I think, a good little project which will produce between, in gold equivalent terms, around about 100 to 130,000 ounces of gold per annum. and it will require around about $200 to $250 million to build. We'll have to find $125 million equity. Talking with the banks, we should be able to do a 50-50 debt to equity ratio, and if that's the case and we can finance that, I would expect that to be up and producing in the first half of 2014.
The other note I was looking at, Gavin, was a BA Merrill Lynch note, again, kind of from back in April after your last major announcement. They were talking about liking the improvement in Chartry, which is where we started this discussion, but the rating was left at underperform because, quote, the group strategy is confusing. What is the strategy for you at the moment, and has that been an issue you've had to address with the analysts?
Yes, I think I must admit in terms of we're in a growth phase. We're a precious metal company. In Chartry we produce gold and silver. Challenger gold mine is a gold mine. The Chile project is gold and silver, and we have our Bowdens, New South Wales, which is a silver mine. In North America, that is not a confusing strategy. Silver here in Australia is not understood nor valued. And we will certainly be addressing those in the longer term strategy. If we can't get value here in Australia, we will certainly make sure that we get value for those investments. If you go and talk to North American analysts, they can't believe that we've picked up those two assets so cheaply.
What's the view on some of those prices for those key commodities you've just spoken about the next 6 months? Considering every day we're speaking about the outlook for Europe, we're speaking about the slowdown or the pickup, whatever it might be in China on a day-to-day basis.
I think there's, in terms of the precious metals, and it's led by gold and silver tends to follow, although they're different commodities. I think that what you're looking at in the precious metals, you have two markets. The physical market, which is we cannot supply enough physical gold to the current demand right now. And you have the paper markets. The paper markets seem to be range-bound, for want of a better word, and that is going nowhere. In terms of if there is a currency devaluation or a degradation of the European money, I think that people will look for hard assets. I'm surprised that it hasn't happened already. I would have expected it to do so, but when it does, there is only one truly instantly fungible hard asset, and that's precious metals. You can go into property, you can go into all sorts of other things, but if you want instantly fungible commodities, it's got to be gold and silver, and I think that you'll see them gradually improve on a fairly erratic basis. I think the world is very skittish right now, and you will see the paper market dominating the trend. But once the physical market breaks out, we know that we cannot supply the demand that is required around the world today.
Great place to thank you very much for joining us, Gavin, and look forward to the next chat. Thank you.
Thank you.
Thanks, Gavin from Kingsgate, putting out some numbers today and really getting across the strategy and the outlook for some of those key commodities, which is of broader interest to, I know, a lot of people at the moment. You're watching Trading Day. After the break, we get some more company news. Alesco's dropped into the red. We'll find out why.
It was Mr. Frost's wish that his son and daughter receive his house, its contents, and of course, his successful ice cream business. He would also like to leave the remainder of his estate to his favourite charities. Oh, your father made one last wish.
Make your last wishes something to remember. After friends and family, please include a charity in your will and help the work live on. To find out how, visit includeacharity.com.au.
Welcome back to Trading Day. Let's have a quick mention of the numbers across the market for you. The S&P ASX 200 down by 0.08% or about 3 points. With the market really steadying after the China PMI release, the Australian dollar got a bit of a boost, but we've also had the Australian Central Bank Governor, Glenn Stevens, say that really policy settings look about right now, and the fact that we're all a bit too gloomy about the prospects. We can handle anything that's thrown at us, according to our central bank governor. We've got the gold price on screen now, just speaking about that with Gavin Thomas from Kingsgate, down by $2 on latest check. Silver also weaker. And the currencies there, the Australian dollar at 102.97 from about 102.60 thereabouts before the PMI release that came out from China and showed that the manufacturing output had actually improved and shown great signs of improvement. The output in July was actually at the fastest pace since, in 9 months or so, and offering a bit of relief amid all of the Eurozone, and particularly the Spanish fears around. The Reserve Bank Governor Glenn Stevens today said he's a bit surprised Australia's unemployment rate is as low as it is. At a speech in Sydney, he's admitted he expected to see the jobless rate tick a bit higher, but overall the economy's in a pretty good position.
I think it would be true to say that in our forecasts we had probably expected it to be